Most of us have been affected by the ongoing financial crisis in our country. Whether we're looking to become first-time homeowners, struggling to make ends meet, or saving for retirement, the difficulties are all too real.
There's several headwinds facing the American housing market right now. One of those is a supply shortage. Studies estimate that up to 8 million homes would need to be built in order for supply to catch up with demand. That makes it difficult for people to find a home that they can afford in an area that they want to live. Another aspect of affordability comes from the current state of the economy. So with higher inflation comes higher interest rates. With higher interest rates, mortgage payments go up. So people that previously could qualify for a mortgage are no longer able to. All of that puts pressure on the rental market. We see record high rents across the country. While the American dream is still home ownership, it's more challenging than ever.
An NPL, or a non-performing loan, is a loan that has fallen delinquent for more than 90 plus days. The banks consider that individual borrower is unlikely to bring themselves current or make up for those delinquent payments. The events of COVID, increasing gas prices have resulted in an increasing number of homeowners across America falling into that non-performing loan status. Similarly, as people fall delinquent, foreclosures increase. Foreclosures result in borrowers vacating because they've lost a house in foreclosure, which results in increasing number of vacant and dilapidated homes across America.
Investing into a mortgage note, especially a mortgage note that could be cash flowing and backed by a single family home anywhere USA, provides a long-term, lower risk investment for the community. We all want a bit of predictability on our investments, and volatility starts bringing uncertainty and risk into investments we could have made a year or 2 years ago. Investing into a 30-year mortgage that could be only 5 years into the term, you now have 25 additional years of long-term consistent payments. It's a really good lower risk investment, especially in an economic downturn.
In these uncertain financial times, Revolve Capital is dedicated to keeping communities together through its unique investing approach. Working directly with homeowners, the Revolve Capital team helps build a strong financial future for you and your family.
In 2018, Revolve Capital was established with a single-minded focus to be a timely and relevant option for the mortgage industry. Majority of communities across the country don't realize that homeowners are 2 to 4 years delinquent post-COVID. Today, we face Tier 1 institutions and we programmatically acquire delinquent mortgages. So we are helping them alleviate that mortgage debt, and we are the private equity firm that are facing them directly to bring those onto our balance sheet. Foreclosure is costly, and it's not the best result for communities across the US. So our goal here is how do we keep families in their houses and avoid foreclosure action altogether.
For a family that may be struggling to make their mortgage payment, it can be pretty intimidating reaching out to a bank. You're on hold for a long time and you don't know who you're talking to. Revolve Capital was created with these unforeseen circumstances in mind. We understand that these are hard times. We reach out to the homeowner and we work with them and get them back on track with their payments. There's a real person at Revolve Capital who's willing to help you.
Revolve Capital's motto is keep homeowners who want to stay in their home in their home. Revolve Capital deploys a number of home retention options, such as a loan modification or a forbearance agreement, that allow a homeowner who is at one time in that non-performing loan status to have a fresh start and to retain that house for themselves and their family. If the homeowner has decided that it is in their best financial interest to leave their property, Revolve Capital Group can prevent homes falling into disrepair, finding homeowners the opportunity to relocate gracefully and allow Revolve to keep the property, avoiding it falling into disrepair.
Revolve Capital sells several different types of investments. One type is a performing note or reperforming note, and that's where the borrower is making steady monthly payments. This is an investment that pays a steady monthly payment to the investor. Another kind is a non-performing loan. This is one where the borrower is not making monthly payments. These can be purchased at significant discounts to pay off, allowing you, the investor, to work with the borrower to get them back on track, or to take the house to foreclosure and take it back as an REO asset. If you're not keen on purchasing a note yourself, but you want exposure to the mortgage industry, you can invest into a special purpose vehicle managed by Revolve Capital. and you'll earn a preferential return, but you won't have to worry about buying, managing, or selling notes yourself.
Right now is the time to invest because we've seen the investment community starting to play defense. For us here at Revolve Capital, we feel like we want to play offense. Houses are beginning to go higher in days on market. The values are starting to dip. So both new and experienced investors are able to get into a space in today's market with a proven platform like Revolve Capital and be the boots on the ground that gets to face these homeowners and get them back on track.
Visit our website today